Welcome back to the Daily Traders Podcast. This is episode number 43 with special guest Roy Dunia, who actually is going to take over the intro for me.
Let's get right into it.
Stop losses are an absolute scam. It's an institutional scam. It's a market maker scam. Somebody prove me wrong. Yeah, if you're too broke to pay for education, what money are you going to trade with? Welcome back, ladies and gentlemen, to another incredible episode, a crossover from the Expert Trader Podcast and the Daily Traders Podcast. I'm here with Mark and Jack from the Daily Traders. We're going to have an incredible conversation today about trading, crypto, entrepreneurship, events, and everything in between. So I hope you guys enjoy.
That was awesome. I don't think we've ever done the reverse intro before.
Well, nice. I don't have to do the intro.
Yeah, that was
welcome.
Sweet. We always mess up. I mean, I've tried to do the intro twice and I've messed it up. I'm 2 for 2 on messing it up. Mark kills it. So yeah, well, Roy, pleasure to have you. Roy is the founder of Chart Addicts. He's also kind of the top dog at the FX Summit. Roy is also a full-time trader. So really excited to have you on today. We're going to talk about everything from your kind of past job life, going into trading, as well as the FX Summit and kind of, how you managed all that. Maybe we'll even talk about Bitcoin a little bit. So Roy, how are you doing today?
I'm doing great. And you also mentioned I'm very considerate because I know that Mark has been on camera all day, so I had to do that intro just to lighten the load up. But I appreciate you guys having me on. My name is Roy. I'm the co-founder of a company called Chart Addicts. We do education for traders, and we also host the FX Summit conference in Miami.
All right, quick disclaimer. We are not financial advisors, so nothing said in this podcast should be taken as financial advice. Now, the full disclaimers is in the description below. All right, I hope you guys enjoy today's episode with our guest, Roy.
Do you want to talk about the FX Summit a little bit? Because I was exposed to the FX Summit. I kind of want to tie this into networking in the trading industry, because I think a lot of people see the trading industry as this kind of loner job where you don't really need to know people. Well, they see other hustles like real estate, you need to know as many people as possible. The more hands you shake, the more money you make. But in trading, it's actually networking is super, super important. Which is kind of, opposite of what people believe. And then when did you found the FX Summit? What was the initial purpose behind that?
So I think it's important to kind of separate trading from the event stuff. Like trading to me is a really serious and it's a personal endeavor, and it is a long-term commitment. So if you want to be a trader, it's kind of it's like building a muscle. It's like being great at an instrument. It's like being great at a language, being great at a sport. You really kind of have to dedicate yourself and sort of immerse yourself in that. And that tends to be once you have education and guidance, the rest of it is just go off on your own and get as many reps in as possible. So trading really is, I think, a personal thing, and you really have to build yourself up to be a good trader, because there's a lot of emotions involved and a lot of maturity that's required. Now, for the event stuff, that's where a lot of networking is, of course, very important. So you got to meet a lot of people in the space. And luckily, I've been able to meet so many great people through trading. I trade, I'm contacting someone to ask them questions, I'm bugging them on Instagram. I have the means to be able to fly out and the freedom to be able to just fly out whenever I want to and go meet somebody, and that just builds a relationship. And so it just tends to flow from there.
I like it. Talk about what the FX Summit is, because I think we're going to try to come down. It's in Miami this year. And it's a pretty cool event. And myself personally, I've just met people through networking online on social media. I've never done that in person. I went to a real estate event. Jack and I did, and that was one of the first networking events I've done, and it's fun, but that was totally out of the spectrum of what I do. So this sounds like a really great opportunity for myself, for both of us, to meet other traders, and running this company, the Daily Traders, being able to collaborate and film with other individuals and just surround yourself with a group of people in real life who are passionate about doing the same thing, about trading. It's super cool you're doing this.
Yeah, meeting people is a lot different. People are watching this, or they might be listening to this podcast right now, and they're basically in the conversation with us. Now, it's a little bit different when you meet people in person. That type of connection and really just seeing people that are like-minded and that are kind of going through the same journey, might have the same struggles, might have a piece of insight that could really help you move forward. That's why I'm so excited about the convention. So just to kind of give a brief overview, it's a 3-day conference. It's in Miami. Last year, we had about 1,200 attendees. This year, we're expecting 4,000 to 5,000. It's going to be for traders, investors, and people who are into crypto. So from the trading space, we have TradingView, Oanda, and some of those big, infrastructure names coming to the event. And then on the crypto side, we have crypto.com, Cointelegraph, CoinDesk, and some of those other big crypto names to come and represent for their brands. So it's awesome. 3-day experience for all investors, traders, post-conference events. You guys can't miss it.
That's wild. So, I mean, I'm also like super interested in you growing this event. I mean, it's hard to get people to show up to a, 5,000 person event. And so last year was the first year of the FX Summit, right?
Yep.
So how did you, I mean, like, where did this whole idea come from? Like, I'm going to start a trading conference. I'm going to start, this big networking opportunity in an industry that generally kind of, it doesn't even view networking as this kind of important factor. And then grow it from 1,200 people. And now all of a sudden you're going to have getting 5,000 people to go to a conference, travel across the US, hotel rooms, whatever the ticket fee is. That's a big feat. So like, how did you go about that?
That's a good question. So, I mean, what would make you want to spend money to go somewhere? Like the experience has to be worth your time and your money, right? It's got to be like worth packing up your bags and telling your spouse that you're going to be going, or maybe even convincing your spouse to go with you, flying halfway across the country, getting a hotel. Like what would make you pay for that? You would have to get enough information and knowledge that it would be worth 10 times what you're paying. You'd have to make connections and meet people and get in a room with somebody so successful that you're able to basically shift your idea of what success is and to be able to learn things that'll be able to, kind of like take your imagination to the next level. And then to network and do whatever you guys want to do on a brand level with the daily traders. But to be honest, it's like, I always think about these things from my own perspective. What would make me fly halfway across the country? Because I don't go anywhere for anything, right? And so it's an unbelievable experience. And that's why the thing that I pride myself on is the people that are coming back. So everyone who went to the convention last year, they're coming back to the convention this year. And that just shows you that it was, just unforgettable. Now, how do we do that? I just don't be greedy. Like we reinvest every single dime back into the conference. My team will be like, oh, are you sure we shouldn't keep this amount? It's like, no, let's do a boat party with 500 people on it. All you can eat, all you can drink, all, VIP ticket holders only. And we'll bring a casino company to bring poker tables and all this other stuff. And so as long as you're not here, like trying to make a quick buck or doing something, you could really put on an unbelievable experience.
That sounds really cool. I want to get on the yacht.
We'll be there. I hope we'll be there actually. Let's transition into talking about trading a bit. Your story, how you got into kind of the world of investing, which you mentioned in our pre-show was through crypto back in 2017, which is similar to my story.
Yep. I actually got into crypto in 2014. We were spending a lot of the crypto, dumb stuff, whatever. 2016, I started getting back into holding certain coins, and it was really just gambling. So you would take, let's say you had like $2,000 because I used to resell shoes. And so I would take money from reselling shoes and just basically put it all into crypto. And so you could have $1,000 in a coin and it could 20x or 30x. And so there was opportunities in 2016, 2017 during that bull run where I was really starting to understand the power of investing. But I was also trading on Binance and some of the offshore exchanges. So I got a feel for buying and selling certain coins versus others. I would try to get into a certain coin before it pumps. It would pump up, and then I would try to trade out into Bitcoin so I could build my Bitcoin account. And so we were just kind of doing a lot of those type plays. I was working at the National Institutes of Health, the NIH, with a few of my friends, and one of them had started trading. And I was really into global banking and fundamental analysis because I was in business school, and that was something that kind of captivated my interest. But he was showing me that he was trading this news event that was happening somewhere in Australia, AUD USD. And I just got fascinated with the idea of putting a bet on something that was happening around the world. Basically, my whole thing is if you see a play, if you see something that's happening, if you see a shift, there's a central bank policy that's happening, and you're able to put a bet on that, that's the kind of game I like to play. And so I kind of just got interested in that, started learning in 2017, joined an MLM for about a month, dropped the MLM, lost money for a couple years, and then eventually started getting the hang of it around 2019. Late 2019, I would say I really got the hang of a consistent strategy and the emotional maturity to not over risk.
So you transitioned from crypto into the stock market in 2019?
The Forex market.
Forex market. And you're trading Forex or stocks right now?
Right now, I trade stock market indices. I trade CFDs.
Okay. Okay.
Yeah. So kind of going back, I'm just curious because the story of every trader is like, every successful trader I've ever talked to, it's like they went through a year at least or 2 years. Some guy I've talked to went through like 4 years of just losing money, not making anything. What kept you going through like those 2 years of, losing money? Was it like small wins here and there? Like, okay, I see the potential in this. Was it just pure grit? How did you, for someone starting out and who maybe is going through that phase right now of trading, what do you recommend to kind of push through that, that one, because 2 years is a long time to just be consistently losing and taking L's. I mean, it feels, it's a shitty feeling.
Yeah, it sucks. I mean, obviously nobody goes a full year losing. You have occasional wins, which kind of gives you hope, whatever. But that was the gambling phase. If you're gambling, the reason that people keep going back to the casino is you win just enough every once in a while to come back. And so as a gambling trader, you'll experience that. It'll be periods of just losing. And then right when you're about to quit, you'll have a win that's like, oh, I'm just going to get back in. When you have a consistent system, it starts to really, really shift that whole thing. So in that 2 years, I mean, to be honest, I'm going to tell you what happened with me, and I'm going to tell you what I would recommend to somebody else. What happened with me is I over leveraged on a bunch of signals, and I was making a shit ton of money in the beginning of trading. So I was like, this works. I was like, I don't have to sell shoes. I don't have to worry about it being lost in the mail, someone stealing it. I don't have to worry about price fluctuation. Like, this was perfect for me. Because of that, I knew the potential that it had, but I just hadn't developed my own emotional maturity. I was always over risking. I never had a real system. I never had a trading plan that I was following. So obviously you're going to give the money back. So that was like those 2 years wasn't just me losing. Like, I would have an account, I would build it up from 1,000 to like 7,000. And I'm like, all right, I'm going to take this thing to 10K. And I'm like, I'm at 7K. Why not withdraw half? Why not withdraw the profits and keep the principal? Any of these things, none of that money management wasn't existent. So naturally, I'd blow it all back down. I'd be at 7,500, blow it all back down in like 5 trades, right? Because you lose the first 2, and now half the account's blown, and you're like, no, I just want to get back up to break even. The gambler's mindset. So I was in that loop for a long time, and you get out of it when basically I was explaining this. I had a podcast with Riz Iqbal the other day on the words of wisdom, and I was explaining to him, when you get so pissed off about losing, when you're like, I'm not going to over leverage because the pain of blowing this account and starting all the way back over hurts so much that it outweighs like the greed of you wanting to take the trade. That's when everything changes for you as a trader.
I like that. And you use this word like emotional maturity. You've said it several times in the last couple of minutes, and you don't really hear that word often especially in trading. Can you explain what like being emotionally mature as a trader means?
Well, you don't hear it at all today in general, because to be honest, like, emotional maturity is basically non-existent in any public discourse today. If you look around and you're just looking for like two idiots arguing, and you're like, well, guy 1 has a point, guy 2 kind of has a point, but this guy's taking it too far because he has his opinion. This guy's taking it too far. What's the middle point? That's the thing. That takes emotional maturity, right? You don't really see that. Everyone's like, oh, all the way blue, all the way red, all the way green, all the way yellow. It's like there's no real sense of emotional maturity is just the best way to put it. So in trading, when you're still like at the whims of your emotional impulses, like you feel the need to take a trade and you take it, you are being greedy, you're being way too hesitant about your trades, and you're falling into those traps, that's a sign of a lack of emotional maturity, because you have a conscious mind, you're consciously in charge, but you're allowing your emotions to dictate your decisions. So emotional maturity is when you're basically in control of your emotions, not in control of how you feel, right? Like, you can feel however, but your perception of how you feel and how you allow it to impact your actions, that is up to you. And so in trading, eventually, emotional maturity includes things like impulse control. So not taking a trade or walking away, those are things that it's like, if you don't practice it, it's not just going to magically get better one day. There's an 85-year-old still clicking that machine at the casino, still on that slot machine to this day. It's been 55 years, no jackpots. So it's like, you have to develop these things like a muscle, and you have to be very conscious about them. So that's why I'm very big into journaling, for example. Sort of just being aware of how you react in these performance states or in these high stress situations, and then being able to adapt from there.
Okay. Talk about what are some tools, for the listeners some things they could do, implement into their trading to become more emotionally mature.
So just track yourself. Track yourself. So how'd you feel before, during, and after the trade? So like I got in, but then 10 pips later or 10 points later, whatever you're trading, you decided to get out because you had just got off a 3-trade losing streak and you just saw the first blues in a couple of days and you closed it. Write that down. And then you're going to look over it at the end of the week and then do it again the next week. What you're going to do is when you flip through those notes, you're going to start to realize a pattern here. Every single time I'm up 1-1 or 1-2 or on my trade, I close it because I'm so scared of it reversing because of this one time the trade reversed on me. Right?
Yeah.
And so you have to start realizing, are you being in control of the decisions that you're making, or are you falling into a trap because of something that happened to you in a past life in trading, like a year ago? You blew this account and you're like, I'm never doing that again. And now you're more conservative. Everything can be found through journaling yourself and looking at a pattern. And for me, my pattern was very easy. Start off the week very confident. I'm ready. Sunday market outlook with the Chart Addicts team couldn't be better. Make money early in the week. I'm feeling really good. I'm going to stop trading. By Thursday and Friday, I'd blow it all back. So I journaled for 3 weeks and I just looked at this and I was like, on Wednesday I was up 2,700, and then by Friday I was down $200 for the week. And then the next week I was up 1,700 by Tuesday, and then by Friday I was down 400. And I was like, what if I just stopped trading when I was up and when I'm in profit? Oh, okay. And so sometimes it's not even about adding stuff, it's just removing the stuff that's hurting you in trading.
Yeah, I like that. I think another kind of tool or strategy to become more emotionally mature, and something that I do and I've taught a lot, is tracking your tilt meter. It's like a gauge, an emotional gauge, to be more self-disciplined and check in on yourself and see if you're making emotional decisions. So you just have 3 basic criteria for essentially comments for yourself. So your trade entry, your trade management, your trade exit. Did I, enter according to my plan? Did I manage this trade according to my plan? Did I exit this trade according to my plan? Or did you not? And you just can track it. You can do +1 for if you entered the trade according to your plan, -1 if you exited too early. Because it's interesting when you look at it. You can make money on 2 trades, but one trade can be a bad trade and one trade can be a good trade, in the sense of looking at the emotional standpoint. You could make money, you hit your target, you get out, or you can, hit that target, hold the trade, let that thing run and get out and still make money. But, you didn't follow your plan. You should have gone out. And so you're almost rewarding yourself based on a bad behavior, even though you are making money. You track that, you realize that you're still, you're making emotional decisions and you're not following your plan. So that's an interesting kind of concept. What are your thoughts on?
Real quick about that. First off, I like that system a lot. So what's the high score? Is it 3? 3 out of 3?
Yeah. 3 out of 3.
So I think what you just said was really important, in case folks missed that. It's sometimes you might make money on a trade and sometimes you might lose money on another trade, but the money, just because you made money doesn't mean it was a good trade. If you broke your rules, if you traded outside of your system, if you over-risked, if you over-traded in order to hit that goal, then technically you're doing things that are in the long term going to hurt you. That's why following a plan is so important. Yes, right now you made money, but is over-leveraging going to help you forever, or is it eventually going to be your downfall? It's going to be your downfall. So focus more on following a plan rather than trying to make money. I think that was a really good point.
This episode is sponsored by thedailytraders.com. Now, if you're interested in learning how to trade in the stock market, I will put a link in the description below with a discount code to my mentorship group. If you join, you're going to get access to a series of videos breaking down my entire trading system, as well as access to see my exact trades in the stock market, including entries and exits. So we hope you guys are enjoying this episode. Let's continue.
Hey guys, I hope you're enjoying today's episode. Now, the only way this show grows is if you guys engage. So that means sharing, liking, commenting. Now, I just kindly ask, if you find any value in this, we made you laugh, whatever, please give it a like, share, comment. It really, really helps us, and it's going to allow us to take this show to the moon. Appreciate it, and back to the episode.
Yeah, and I've realized tracking my tilt over time. Now say I have a really busy week coming up. I have a lot going on in my life, outside of the trading world. And I know that there's just going to be a lot of outside distractions that would, prevent me from making correct decisions. I'll just take the week off, or say my tilt's really red on the week, 1 week. maybe I'll just kind of take a day or two off. And I think you'll get more in tune with yourself without even, once you track it, maybe for say 6 months to a year, you'll really just get a feel without even having to look, see if you're, -1, -2, whether your tilt's positive or negative or essentially flat. You'll just know, you can tell I'm starting to trade, in negative tilt, red tilt. So I'll take some time off. And then that will, it'll save you money. Like you'll prevent yourself from losing money by just, sitting back, sitting on your hands and taking time away from the market.
And one
And that's
thing, sorry, just one quick thing on that too, is that it's something you have to develop over time, because the emotional maturity, it's like a muscle to be able to pull yourself away in those situations. Because tilt is mostly used in it's a poker term. It's basically when someone has pissed you off at the table, and now you're sort of doing things that are irrational. You're over betting. You're kind of going way too big. You're showing your hand. And when you're on that tilt, you're not really thinking clearly because you're in an emotional state. Now, what people don't realize is when you write a trading plan, for example, you're writing it in probably the best version of yourself. You're motivated. You took that piece of paper out. You're on the Excel sheet. You're on the Google Doc, and you're lining this thing out. The person that's going to blow your account is 2 weeks from now when you wake up at 7 a.m. on a Tuesday and you want to put 3 positions on instead of 1. And so really the game in trading over the long term is how to pull yourself out in those situations. And like you said, like if you have a tilt meter, the goal is over time to start figuring out what are the triggers that put you on tilt and recognizing those before you're in that state. Because once you're seeing red and once you're locked in, you're monomaniacally focused on the screen, sometimes it does get hard to not make trading errors because you're trying to you're really just not in the best state of mind.
Yeah, no, I like it.
Yeah, I want to add one thing real quick, kind of on the topic of emotional maturity inside of trading. One thing that really helped me was I think it was called an equity curve, and I don't know how they did it. It was with AI. I used this trading logging system, Edgewonk. Mark, I think you used the same one, and they have this cool feature where when you log all your trades, your entry price, your exit price, your targets, your stop loss, and then it tracks all these trades. And when you do it for long enough, it gives you this like equity curve. And what you can see is that, okay, based on this AI algorithm, if you keep sticking to these, this strategy with this risk tolerance, with these profit margins, with this probability, this is what your money's going to look like. And it creates 3 scenarios of what your account balance is going to be based on your wins and losses over time. And seeing like an up curve is probably one of the most motivating. Like I went a couple weeks with like just red weeks, but my curve was still up. And sometimes I'll look at that and it's just such a motivating thing to say, hey, I got to stick to my plan because this is where it's going to get me. So that really helped me see, okay, this is like the big picture here. I got to stick to it. And then, helping myself not get on tilt because I see I just gotta stick to it and it's all going to be okay. So I don't know if for new traders out there, I'd really, really recommend getting some type of trade tracking software that has that feature.
I think the main part of that is get wins, because wins build confidence. It's like yes, seeing the progress is really it's motivating because it makes you want to keep building that progress and not mess it up. But just like when you're losing for a long time, it really destroys your confidence in trading. So people should try their best to just get wins. And that's why people got to stop aiming for the moon with every trade. Not every trade's a home run. Get wins, because wins build. So Tim Grover, who was Michael Jordan's trainer, he has this quote that's like, losing builds character, but how much character do you really need? It's like, okay, yeah, you're losing builds character. At some point you're good, right? You have what you need. Now it's time to start building some confidence. And so when people have a more realistic approach to trading, so for example, like what I see in our space is when I talk to a lot of our students, folks would be way too conservative with their risk, like way too conservative with their stop loss. Do you guys trade Forex by chance?
No, I never.
Do you guys have stop losses? Do you guys trade stocks, options, futures? What do you trade?
Yeah. Options.
Yeah. Okay. Do you guys have stop losses?
Yeah.
Yeah, I don't set them. I just set alerts and I just place an order myself. I don't like preset a stop loss.
So what happens with people who trade after a while is that you become very conservative, and so you end up putting tighter stop losses because you don't want to over risk, but then you become very overzealous with your target. So you put a target way up there in the stars, and you think that it's going to hit. And what we train traders to do is to be a little bit more generous with your stops, because the markets aren't cookie cutter. Sometimes they do have some irregular movements, and you have to have a general idea of like reasonably can the market spike beyond your zone and still go your way? So you have to be a bit more generous. Now with your targets, how often does the market go to 2-to-1 R or 3-to-1 R in reverse? You're aiming for 5-to-1. It's halfway there. You're like, oh, great. I'm going to turn off my phone. I'm going to put away the screen. You come back and it's retraced. So for me, I think that being a little bit more conservative with the targets is something that helps get consistent wins, which ultimately builds confidence.
Yeah, no, I like that. I want to talk about your trading system. What's your strategy look like? And talk about trading on a funded account, which is what you do. And I have no idea how much you trade with. Maybe you could talk about that. But I think it's interesting for a lot of people realizing that just by passing some challenges, you can get a lot of capital to actually trade with.
Yep. So I have a 200K account with FTMO, and I'm going for another 100K right now. My goal for 2023 is to get $1 million in prop funding, which basically allows you to trade up to 100K of capital because you get 10% of that money. So basically, these firms will allow you to trade like a 100K account, but you're not allowed to risk more than 10%. So really, you're trading about $10,000 worth of leverage. So what you can, or worth of margin. So what you can do is basically do these challenges. They take about 10 to 30 days, depending on the market conditions, your strategy, etc. And then there's multiple phases. Once you pass all the phases with the requirements, then you get a funded account and you can start trading. When you take a withdrawal, they take a percentage profit split and you keep the rest. So that's just like a quick rundown of what prop firms are. My strategy is I try not to trade every day. I try to show up every day just in case there's opportunity, but I try my best to only trade 2 or 3 times a week. Typically, that's like Tuesdays, Wednesdays, and Thursdays. I trade the NAS 100 index, and I try to trade around market open for New York.
Okay, interesting. Do you have a day that's like more profitable, say like Tuesday?
Thursdays, 100%.
Okay. I think for a lot of people, like looking, maybe an unexperienced traders, like that's ridiculous. Like, how do you have like one day that's better than the others? Like it seems kind of like this like interesting, like superstitious thing. But Roy, could you just like, tell people who might not understand, like why would you have a one day that's normally better than the rest?
First off, I did 110 weeks consecutive streams on YouTube that are all still up that you guys can go watch, where I traded every Thursday because that was my day. And we would trade every single New York session live on Thursdays. They're on our channel. So the receipts are there. You guys can go check the win rate there. Now, realistically, maybe it's a psychology thing. Maybe it's because on Mondays, I was trying to be overzealous because I'm fresh for the week. And so I'm taking trades that might not be ready. Maybe on Fridays, I'm a little bit less sharp because I've been trading all week. Mentally, I'm exhausted, whatever it might be. So maybe there are some of these other things. I just realized markets are very liquid on Tuesday, Wednesday, Thursday. Wednesdays are a ton of fake outs on the NAS 100. Tuesdays, you get a direction in the trend, but not as aggressive. And Thursdays, high volume. So, you just don't want to show up when there's nobody there. It's like, imagine you want to go pick up basketball, for example, and you keep showing up on Mondays at, I don't know. I don't really play that much pickup, but let's just say like Mondays at noon. Let's assume that's a slow time for playing pickup. And you go there every Monday at noon and you're like, I can't wait to play with a bunch of people. Wait, where are all the people? Like versus you go on like a Friday night and you know that everyone's going to be there, or like a Wednesday morning, like 8 a.m. where all the people are going before work, you're going to get a game. So long story short, find the high volume sessions during like for whatever pair you're trading and try to avoid those low liquidity sessions.
Okay. I like it. As far as like sizing, so you're trading with 200,000 on one of the funded accounts. They give you 10%. So you size the full 10% on a position. What's your sizing look like, your risk reward strike rate, if you want to like break that down?
So typically when I'm doing a challenge or when I have the account, at first my biggest priority is to build a cushion. So I try to risk a little bit less than I would normally risk in the beginning. So maybe 0.5% of the total account or 0.75%. And then as soon as I can build like a 3%, 4% cushion, I feel more confident moving it up to 0.75% risk or 1% risk per trade.
Okay.
Yeah, because if you lose a certain amount, then
that's what I was wondering. Like, when are they going to like say, hey, give us our money back? You're not trading anymore.
On FTMO, it's 5% maximum daily or 10% maximum total.
Okay, so if you lose 5% of the day, you're cut off. And if you lose
floating equity, not even if you lose it. If I'm in a trade and I've leveraged too big and it goes into a negative floating equity past 5K and then goes in my direction, I make 100,000. you still violated the daily maximum loss.
Whoa.
Wow.
So,
Yeah,
so it really forces you to be disciplined.
Yeah, I was gonna say. I mean, you're working up toward hopefully having 1 million, right, to trade with. I mean, I trade with 500K right now, and I'm trying to think about if I was restricted to like kind of those confines, like how that would be difficult. But I guess it does keep you really disciplined. But also, like it seems like I don't know what your numbers look like exactly if you're taking 3 trades a week, how much you're making. I think people just start out with like the average is probably $500,000 someone throws in an account, and their gains. Like I think everyone has to realize that when you start out trading with $500, you're not going to make money. You're not going to make any money to make it seem like it's worth your time. That's just the learning curve for you might be a year or two of not making money. But you have to focus. I think a really cliche saying is like focus on the trading and not the money. People start out with $500 thinking they're going to make money. You should just realize like that's your tuition, $500, $1,000. And how much tuition do you have to learn how to trade? How much, like, obviously you find good mentors, you can speed up that learning curve. But you pay $200,000 for college and you might not get that back for 10 years because, you're getting a job after college. You pay that back. Right. So it's like, hopefully you won't lose $200,000. But realizing that you need money to start out, not so you can make money, but so you can essentially pay the tuition to learn how to trade.
Yeah. I think like, so I think it is a double-edged sword because I came from a time in the Forex space where there were no prop firms. And so you had to learn how to build a small account because nobody just like very few people came into the space with tons of capital, especially if they're trading on some of the platforms that we were trading on back then. So you're trying to flip small accounts with high leverage, 1 to 500 leverage, 1 to 1,000 leverage. There was some platforms offering 1 to 2,000 leverage back in the day. It was Wild West. It was absolutely nuts. And so did I learn a skill set of being able to build a small account? Yes. Is that now in hindsight, is that gambling? Is that educated gambling? 100%. What I'm doing now, I would consider trading because I have a system that works. I don't need to risk too much on the account in order to make real money. So 1% risk on $1 million account is $10,000. If I have a 1 to 3 trade, that's $30,000. If I have a 1 to 5 trade, that's $50,000. And so if I catch 2 of those a week, that's real money. So right now, if I'm making, let's say 3,700 or 4,500 in a week, that could be 35,000 or 45,000 in a week. And so for me, now that I've spent years developing a consistent system that I know works for me, and I'm still obviously building my emotional maturity, but I've kind of built myself up to the point where I'm not going to self-sabotage. Now my biggest game is just go get as much capital as possible. Small risk, 0.75%, 1% risk, and just trade the same system.
Okay. Do you have any advice for someone starting out with a small account, like $500,000? How they can go about kind of growing that account, not blowing up? I mean, that obviously you size a percent. You might not even be able to buy a quarter of an option contract or a half of a share. That's also difficult when you can't actually have enough capital to trade what you needed to trade, and like without putting 50%, 100% of your account on that trade.
So I worked as a wealth advisor for Merrill Lynch at Bank of America for a while. And so I really came to understand the equity space, equity, bonds, traditional investments, and how that game works, the long-term game. Now you have to understand the vehicle that you're trading. Like you have to understand the instrument that you're trading. If you only have 500, $1,000 and you really want to build something, maybe options is not for you. Maybe stocks might not be for you because the return you're going to get is not going to be worth your time. So at that point, you do need bigger capital to play those games. The reason I personally traded currencies is because of that leverage. I can leverage my account 1 to 400, 1 to 500. So really with the $500 account, I could make thousands of dollars. Now, again, would I have to risk the whole 500? Is the whole leverage piece something you have to learn over time? Yes. My advice is build a cushion. Same thing that I always tell folks. So imagine like, let's use the pickup analogy. We're still on basketball. So you played a couple games, you played 2 games and you had a very lucky morning and you hit a bunch of lucky shots and you're just like, dude, I'm draining it, whatever. And now you start to feel overconfident. So you immediately go to the next arena where there's like the high level games. You're like, I'm going to go play with those guys. And then you get absolutely crushed and your confidence is destroyed. So in trading, what tends to happen is like when you have a small account, you make some money and you start to get overzealous and you're like, let me start to risk more because I have more equity to play with. And that's where people get screwed. So yes, you made money. Good. Keep going. same risk, keep it going, keep building that cushion. Now, once you're at a point where you can take out your initial capital, then you can start to go to a higher risk, right? Because now you're playing with the market's money. So really, it's just about folks having realistic expectations.
Yeah, I like it.
So I started seeing success in my trading, surprisingly enough, when I got a full-time job. So I realized that if you have financial security, you're a lot more confident as a trader. And so that's something that I would encourage a lot of people. Like, don't look at the full-time trading BS and think that's the goal. Trading doesn't have dental, medical, none of that stuff. So if you have financial security, you're able to make much more rational decisions. So enjoy that job, take that money and invest in yourself versus spending it and blowing it. All right. The second piece is that I was able to start investing in things outside of trading, like crypto and all these other assets, while I was making trading money. So while I had this job, I'm making money from the job. I'm making money from trading I got introduced to FTMO in 2020. So I'm working as a wealth advisor at Merrill Lynch Bank of America. I'm managing millions of dollars of family funds. This is long-term wealth investing. And I'm trading. Every time my boss would walk behind me, I'd flip my trading view screen over to the dashboard and then flip it back. Eventually I started to realize I had enough money saved up that I could leave. And my job was taking away from the amount of money I could make at trading. So when I had to go into a meeting, I would set my stop loss and break even. Or I would basically just close the trade out because I didn't want to have the risk open while I was in the trade or while I was in the meeting. Go in the meeting, come out and realize they would have flew for 4 or 5 more R. So now I'm sitting here realizing this was a $5,000 trade, but it could have been a $17,000 trade had I just let this thing run and I wasn't impacted by this whole thing. So eventually I had to walk away from my job. When you become a full-time trader, you think someone's going to walk out, hand you the Lamborghini keys, and you're going to be the fucking man. You're going to post it up on everything. I had a 3-month losing streak after I quit my job. Okay. Wow. So just to let you guys know, it's very possible. Now, luckily, when you go to quit, you have to have 6 months, 8 months, 12 months of bills put away to make sure that you don't have to have that level of stress. So luckily, it wasn't a thing where I had to go back and get a job, but that happened. And then the month after, in October, I ended up having my biggest month ever, which was $30,000 at the time, $30,000. This was in 2021, I believe, when I ended up quitting in August of 2021. I think I left my job. In October, I had my biggest month. And then the rest was history.
What did your months look like after that? If you remember.
So the thing about trading is everyone sees that and they're like, oh, Roy's making 30 grand a month every single month. Some months it's going to be 7 grand. Some months you might lose money. I might lose money 3 to 4 months out of the year. But those 2 months where you have like a 60K month or you have a 50K month or you have those big winners, they really hold you over for some of the smaller months where you're making like 2%, 4%, 5%. And then eventually, if you're in the game long enough, you haven't blown your account, you're going to have the 25, 35% months. And that's where the real fun starts.
Yeah.
Yeah. That's a really good point. All right. Well, I think we're going to wrap it up there. Unless you have any final words, Roy.
I do. So FX Summit 2023 conference, fxsummit2023.com to grab your tickets. All investors, traders, and crypto lovers are welcome. The daily traders, if they accept this right now live on this podcast, might be doing a live podcast there in the expo. Yes?
I'll do it. Yes.
I'll do it. I'm in.
So if we set you guys up a podcast station, you guys will do the podcast?
Yeah, I'm down.
Yeah, let's do it.
All right. So if you guys want to come hang out with me and the guys from the Daily Traders, come out to the FX Summit 2023 conference in Miami, and we'll see you guys there.
Awesome.
That was awesome.
Thank you guys for watching.
Thank you, guys. See you in the next one. Peace.